One of Canada's largest pension funds bet big on office and commercial real estate, and now it's absolutely crashing. So let's get into it and see what's going on here. It's kind of crazy. So we're talking about the Ontario Teachers Pension Plan again. I know we've been through the Ontario Teachers Pension Plan many times on this channel, and I just want to remind you, they were the ones that invested in FTX. What a great investment that was. It wasn't a massive part of their portfolio, but still, the fact they invested in it and, you know, their risk department didn't see that one coming is unbelievable. They're also invested in subprime mortgage company Canada Guarantee, which, if you look, has this Maple Leaf Advantage program aimed at newcomers with limited documented credit history. Wow, that is just a really safe investment. So just to kind of give you a background on Ontario Teachers Pension Plan and what they're into, we're now going to go into the office building. So let's see what they're talking about here. So all those empty seats at the office are taking a bite out of Canadian pension funds. This week, the Ontario Teachers Pension Plan reported it had missed its investment target for 2023. The biggest offender, OTPP's real estate portfolio, which saw a return of minus 5.9%. But Teachers is not the only big pension plan which has seen the value fall of real estate investments. And the funny thing is, we went over this a couple of weeks ago about another pension fund, you may have heard of it, called CPP, that literally had to sell a New York office building for $1. Just $1, literally. American though, not Canadian. But anyway, they had to sell it. So it's really interesting when you think about what's going on here. The commercial real estate dynamic looks so unhealthy when you think about it. I mean, so many offices are sat empty, and we've seen that for a long time here in Calgary, where the vacancy rate has been above 30% for the longest time, not just downtown, but also in the industrial areas as well. And you have to wonder, well, somebody's paying for that, and how on earth are they allowing that to sit empty? And basically, it seems like commercial real estate really seems like almost residential did back in 2008, as in a global financial crisis, possibly problem. So anyway, it's very interesting what's going on. So the Ontario Municipal Employees Retirement System, OMERS, reported its real estate portfolio had a return of minus 7.2% in 2023. And the Canada Pension Plan Investment Board, CPP Investments, saw its real estate investments drop by 1.2% in fiscal 2023. What was once a stable, safe investment category, finance and real estate, experts say has been pushed onto shakier ground by a combination of hybrid work, expanding online retail, and high interest rates. So yeah, I mean, it's really a shift in consumer habits that have caused this, but also a lot of overbuilding has caused this as well. You have to note that. So some of that hesitation has been because the owners of large properties are waiting for the US Federal Reserve and the Bank of Canada to start cutting interest rates. Again, we've heard this over and over again. It's kind of the story that's just getting boring and old at this point, even though the Federal Reserve last week did come out and they seem to be more dovish, but that's more an indication of the economy is worsening than anything else. You know, when central banks start cutting rates, it's not because everything is doing great and we've got this soft landing. It's the complete opposite of that. So waiting for that scenario to arrive could be a recipe for disaster, in my opinion, if you just look at how prior history has played out. So they're waiting for them to start cutting interest rates. Once interest rates start to come down, real estate values could come back up. And again, that's a dangerous word to use there. But with less overall demand for office space, not all properties will benefit from the bounce back. Yeah, and that's totally true. When it comes to a lot of retail properties that are sat empty right now, you have to admit, like, what is going to happen to them? Are we going to suddenly see a boom if interest rates come down? I don't really think so, guys. But anyway, Scotiabank is even putting out, look, real estate prices are going to fall even in an optimistic scenario. So this is interesting. Scotiabank expects Canadian home prices to fall. The base case or most likely scenario, this is the one that Scotiabank's going with, shows the bank expects home prices to continue falling. A typical home, MLS HPI, is expected to fall 3.7% over the next 12 months, period period starting January 31st, 2024. Home prices are seen rising 2% over the remaining forecast period to follow. Typically a 4-year period, not exactly an end of world downturn, but may surprise those that see a price boost from forecasted rate cuts. So again, Scotiabank is coming out and saying, yeah, it doesn't look so optimistic for even residential real estate right now. So what does that really mean for office? And as we went through with the report last week, which was showing, how many billions of dollars of mortgages could be pushed underwater if prices continue going down, this doesn't really look like a good scenario for the banks, especially when you have it all concentrated at 5 big banks here in Canada, all the commercial real estate lending, all the residential real estate lending, because we have this monopoly in the banking system. So that concentrates all the risk there, and it's very, very interesting. And, in residential, you've even got some crazy things that are still going on right now. I gotta show you this chart. So house flipping surges to new high in Calgary. We've been talking about Calgary a lot, and again, I've been saying multiple times over the past year how this is becoming a center for speculation. And this literally proves the point. And it's not even talking about out of province investors. It's just talking about people flipping homes, which of course, a lot of it could be out of province investors. So you can see on this chart, compared to other places in the country, how Calgary is just ripping higher here. So Calgary, 6.5% of homes in 2023 Q4 were flipped. So that is crazy because you're looking at the 2019 high. What's interesting is this starts to build even before the pandemic actually hits. But you can see Edmonton also going up whilst Vancouver is going down. And of course, I think that's because you've got the out of province investors that are coming to Calgary and Edmonton now, and they're using this dumb sort of logic. Again, a lot of dumb money is swirling around. It's just a case of where is that dumb money? And they're using this dumb logic that, the prices are less than Vancouver, so that must mean it's cheaper. And again, that's not how you value real estate. That is just a completely ridiculous view, but that's what they use to justify prices. And I've seen so many realtors and different people who've done exactly the same thing and fall for the same trap of just compare it with somewhere else in Canada and it looks very, very cheap. But that's like saying, okay, this stock is $10 and that must mean it's cheap because Nvidia is $500. So it's cheap, but you're not looking at any of the fundamentals. But again, we're in a speculative mania and bubble still in certain places, which is evident whilst other places deflate. You would think by now that people have kind of worked it out, that real estate doesn't always go up in price, but they just all pile into the markets that are all-time highs. It's like a game of chicken, essentially. It's kind of crazy, guys. But anyway, if you've enjoyed this video, I would highly recommend that you check out that video there. If you're looking for a VPN to get around all the censorship laws in Canada, go to expressvpn.com/market mania. I will see you in the